Good morning. Good morning, YouTube. Good morning, guys. How are you doing today? Let's check that sound and visual, everything is okay. So we are ready. How is it going, guys? Anything on the scope so far? Did you spot anything? Let's start with the European indices. DAX. What happened at the open? Nothing much, actually. That's a minute chart. Let's go on the 5-minute. Excusez-moi. Oh, classic false breakout on the 5-minute chart. Wow, how beautiful is that? How beautiful is that? The market, see how the market made this false breakout, shump, and then retraced everything to the downside, and that was the trade. Let me show you the trade. What is this one here? Guys, the price was making equal highs, equal low. So it came from this short-term uptrend to a ranging classic reversal. And then the last swing low got broken. That's a tribal top reversal. And I'm saying that because I don't want you to trade the chart patterns as itself. I want you to learn to know them so you can put them together with the context of trend analysis, and that's where you create edge. So after the market made this lower low, we were looking for a trend to the downside now. So what happened actually, that retracement after this lower low wasn't a tradable signal. You see, that was at 10 a.m. when the market opened, or 8 a.m. UK time. So after this lower low, we confirmed that a downtrend is intact now. Now we have a downtrend in place. So this retracement here could have been the entry. I didn't place any trades. I just opened my laptop, to be honest. So I didn't get involved on this one. Bear with me for a sec. Alrighty. So after this move to the downside, arguably we are expecting the continuation, right? And we expect the market to keep moving lower unless we see evidence of reversals. So any comments? Waiting, morning bearish engulfing on 15-minute bearish engulfing. Yeah, it was this one here. Excellent. Yep. So the did we hit support? We still. What's on the higher time frame? Higher time frame is really ranging. So if this bearish engulfing of the hourly follows through, we expect the price to continue lower and come somewhere into this zone. around 26,200. Looks like it can be a key level. Let's keep an eye on that. Then on the gold, yesterday I've sent on the Telegram. Today I didn't send it yet, but yesterday on our Telegram channel, I sent you the focus. So we send here on the Funded Hub, the VIP channel, we send the focus and then we forward it. 5 stars I gave to the S&P 500, or that was August 4. No, man, we're not August 4. Was it this one, August 10? Yeah, August 10 here. So yesterday I gave 5 stars on the S&P 500. I gave 4 stars on gold, and here is the explanation, of course, with their charts. To get them in real time only through the Telegram channel. So if you're not there, plug yourself in. You can see the Telegram. Let me put it on the screen. Yep, this one here, how to join and get them in real time. So, and I also point out what wasn't in focus, Nasdaq and US oil, and understand that the charts we said that are not in focus for the day. It's based on the analysis happened at that time. Yeah, as the market moves, levels can break, price will develop. So I cannot just sit there and every single minute update the analysis. Okay, up to that point, that was on the scope for the big picture and all this stuff. Okay. And what we sent yesterday was, it was on this one here. After this dodgy, bearish dodgy candle, like we call it, gravestone dodgy on the hourly, I drilled down to the 5-minute chart and I tried to pick up a, let's say, a small, was it? Yeah, it was somewhere here. I picked up an entry here because of this, because of the overall analysis. Anyway, it's on the Telegram, you can read it. And the price didn't really move in my favor. It just took my stop loss. I had a stop loss above this high here. But then I re-entered and I posted. That bearish engulfing was a big case here to add a little bit more on the trades. And then as the price was going down, another bearish engulfing here. All my targets, they were here. It's on the Telegram, actually. Yeah, is here. So first one was signal dropped, stop loss, blah, blah. And I made a comment that I got stopped out on this one. And after, I think 5 minutes or something, yeah, 5 minutes, it was the second opportunity, because the market, sometimes, you know what, we try to pick up the right retracement. Some people, they will ask me, okay, Theo, why as you sold here, you didn't put your stop loss above there? Because I trust what I see on the chart, guys. I see a swing high. That means above the swing high, the sellers created a resistance. And if the market will move in my favor, then we're going to see an impulsive downward move. But there are times the market will make a complex retracement. And it's during these periods or during these times we're going to get the losing trade. But don't be scared if you believe your analysis and if you believe your candlesticks. When you see the shift, don't be scared to re-enter. So that was the second trade. It went all the way down to the take profit. Now, the second entry here, it was, I think, at 75. Yeah, exactly here. The second entry, for the second entry, I placed the stop loss above this high. Why I did that? Because I didn't have a confirmation of a swing high at that moment I placed the trade. And yeah, the ultimate target, the last target actually, it was at almost 321. So do the maths for a moment, guys. Let's do this. For example, you place, even if you place, let's say 100 trades, okay, and 40 trades will be winners and 60 trades will be losses. If you go, let's say, for 3-2-1, and you can handle yourself to go through these 60 losses, but not to randomly place trades because you want to make 100 trades appear. You place the trades you were supposed to based on your trading plan. Like if I see my bearish engulfing at a kilovolt of resistance where I want to enter, I'm not going to hesitate to place the trade. And if I get a losing trade, I will place another. And if I get a losing trade, I will place another. And I will just keep doing that. Because I know my stats for so many years now. If I win only 40 of these trades, with even a 2-2-1, not 3-2-1, but with bearish engulfing and good stop loss management, you can go for a 3-2-1 in a downtrend. Especially if the bearish engulfing, it's a quite small and it appears a little bit at the top. It's good. So do the maths. If you're risking 1% per trade, that means 120 plus on your winner side. And if you're risking 1%, when you lose 60. So do the maths here. It's plus 60. If you are risking 1%, it's like 60% increase in your account. Now, when can this happen? As soon as you place 100 trades. So how to place 100 trades or how often to place a trade? It depends on your trading style. I get 100 trades on around 3 to 4 months period because I'm going to place, for example, if you place two trades a day, okay, for example, if you are trading a regular session on the 5-minute chart, easily you're going to find 2 trades to play, high quality trades. So 2 trades per day. Let's say you are trading for a calendar week time, you're going to place, let's say, 10 trades per week. In a month, you're going to place, let's say, 30 trades, because I'm not going to say 40, because days like the non-farm payrolls, maybe we don't get anything. Days like the FOMC, maybe we don't get some good catalyst to trade. But so let's say and maybe not every day we want to place 2 trades. So let's say instead of 40, 45, we do an average of 30 trades a month. Again, some days you're going to place 2 trades, some days you're going to place no trades. Some days you're going to place only 1 trade. 30 trades a month. In 3 months' time, it's about 90 trades, 3 months, 90 trades. Give it or take, maybe let's round it up to 100 trades. So out of these 100 trades, if you follow the same plan day in, day out, you trade the same thing. You don't trade today a support and tomorrow you trade a trend and the day after you trade a trend reversal and the next day you see a nice bearish engulfing, so where retracement can start and I place a trade. No, you don't do that. You trade one high quality trading style. There is any strategy you're going to use, even if you trade smart money concept, if you trade ICT, if you trade order flow, if you trade volume, if you trade candlesticks, if you trade Western analysis, anything, even if you trade crossing moving averages, guys, just moving averages crossing. When there is a trend and you want to place a trade, On average, you're going to get about 40 trades as a winners on average. So these are the maths. And if every 3 months you make, let's say, 60%, in 12 months, you make about 200% on your account. Guys, this is serious. It's not a joke. But many traders fail to see what they can achieve after 300 and 400 trades, and they over believe and over exaggerate what they can do in the next trading session. That's not how it's supposed to be. I hope that's informative well to help you becoming a better trader. So let's keep on going. I want to see Nasdaq today. I want to see Nasdaq this session because I believe we can get something good out of that. A doji candle followed this bullish. It's to me it screams that the market wants to go a bit lower. So if the market wants to go a bit lower, I'm gonna go with that. And this is what I like on the 4-hour chart. A bearish engulfing form during the New York session the day before, and the Asian towards the Sydney session, towards the European and London session. They are trading inside of the range formed during the New York session yesterday. So most likely we're going to have a continuation to the downside here. But how can we get there? So sometimes we make the plan, we see what's going on, but we don't have the right, we don't get the market doesn't give us the opportunity to go with the flow because we don't see our pattern there. And there are a couple of strong supports here. I'll take this low. I'll do it like this low with that one now. So we have this demand area. It's about 53. It's about 3 points there. What do we have here on the 5 minute? Then we can make it a bit smaller, but we have another area here. So ideally, to get a good trade from this one, we need to see the break, a clear break of all these levels, because literally to try and trade within these levels, it's just a matter of luck if the price will move in the direction we want, because we already hit a key level of support that formed today. Also here, if we sell at the we're not going to do that, but let's say we sell here, there is a high chance to see buyers there, to see buyers there, to see buyers all the way. So it's better to wait for a clean market structure, a clean direction, a clean price action before we move. So here sales only below these key zones. Nasdaq looks better. Nasdaq didn't reach this support, so if we're gonna get a catalyst here, I'm gonna trade Nasdaq. This one didn't follow through, so to trade Nasdaq, I want to see the price below this zone here. Wait for reversal candle. Here, because if we get an entry somewhere there is plenty of room to make a 2-to-1 and 3-to-1 until the price can reach this level. Yep. So just give me 1 second to pour some tea in the cup. All righties. And gold. Mr. Gold, what's the deal with you today? Let's check the gold. Clean everything here. And let's go. Daily chart. The daily made here came from lower lows, lower highs, classic non-failure swing bottom, reversal, turn to higher highs. So higher time frame is in an uptrend, but why we don't care if the higher time frame is in an uptrend? Because we're going to trade on a 5-minute chart, guys. We want to trade a momentum. We want to get in and out. We're not going to swing the daily or the weekly, so we know what's going on these higher time frames. So on the 4-hour chart, we had this swing high here. And this is a key support. Hourly, it's this one now, it becomes that. So on the hourly, the market is in an uptrend with higher highs. What's the FIBO on the hourly? It's see that 61.8. Okay, that's good. And on the counter, how far can go up? If it's sat there on the 61.8, so there is plenty of room for this level and this level. I'm not going to overdo it. So here is the play, because we see that on gold the market changed on the higher time frame, and I would like to go long on gold now. The take profits should be conservative. So take profit area, and this one, take profit area. These two guys, take profit areas. All right. So on gold, I'm waiting on the 5-minute chart for a retracement, nice retracement to go long. This is what I'm waiting on gold. Retracement on 5-minute to buy. You see how I started from the top-down analysis and what did I look specifically on each time frame. I'm doing this, I use this approach, guys, for about 8 years now. I don't change it because, and here is the thing, when there is a lot of noise on social media about, a new strategy, a new market approach and everything, think of it, how a new approach came up from someone did maybe a research or had the appetite to, let's say, present something respectable. So I'm going to go there to investigate it, to question it. I'm not going to go there to take it as granted, especially because of so many, fake gurus that they are hopping around on social media. So the question I want you to ask yourself, you can also question my strategy, my methodology, my everything. Question me. But I have on my FX book, I have my records there. You can go and see them. I'm a certified market analyst. You can go and see it. And my approach, backtest my approach. And I do it in real time here on YouTube. So the question is, if these strategies they brought up today, or these new methods they brought up today, they are canceling everything that it has been the case for so many years. How all these real successful traders 10 years ago, 20 years ago, 30 years ago were making a solid amount of money and had enormous success trading what today people say doesn't work. They used to trade indicators. They used to trade Bollinger Bands. They used to trade moving averages. They used to trade ATRs. They used to trade RSI, MACDs, Ichimoku. They used to trade so many different things. Yeah. Think about that. How is possible these guys were making money with this stuff, but today, because someone came up and say, you know what, indicators, they don't work. Indicators, no. Is the trader that doesn't know how to use them and in which market conditions to use them. I understand that market conditions changed now, and we have more ranges, more sideways, the trends are different. So it doesn't mean that because the market condition change, the indicators, they don't work. You see, I don't use indicators, but I like to be, fair with everything out there. So just have the common sense to understand, anything around one subject. So on gold, it looks like the market didn't want to retrace more. See, we started a retracement, but the buyer stepped in fast. Maybe that long position, maybe the break of this one will be a good trade like this. Okay, the price is there now. So a risk of about how much? 44 points, 44 pips there. I'm not going to place this trade, guys. I don't want to get into the market now in this one here on gold, because I like if I don't have the bullish engulfing here, and if I don't read the order flow to see how the orders allocated within this candle, I'm not going to just blindly go and buy because I want to get into a winning trade or something. Always remember, setup, you must have rules before you get into trading. Before you get into trading, you need to have rules. After you finish your trading session, you need to go and check your rules if you honor your rules. This is the steps, the beginning on how to become a successful trader in the financial markets. We didn't check the news today, right? We didn't check the news. In Australia, what did they do? They kept their interest rate unchanged. So how did the Australian dollar moved? Whoa, look at this drop. Look at this drop. So when they put out their rates, just 20 pips. Oh, mate. Come on, mate. Just 20 pips. 20 pips only. But you see the market took it as a negative and weakened the Australian dollar because the interest rates didn't increase. Some people they will ask, okay, they didn't increase, they remained at 4.35%, but why the price didn't increase? Simply because when a central bank keeps their interest rates unchanged, it's a weak sign for the currency. It's not a strength sign for the currency. But as you see, the euro, the pound here, the euro also is falling. Sterling also is going down. All of them. S&P, Nasdaq. Did we get anything? No, still nothing. On the S&P there, gold. You see gold, put it this bearish engulfing here. This is what I like to trade. This one here. So if this, see how powerful it's a bearish engulfing. Let's say this bearish engulfing will work. Okay, let's assume that it will. So we have an ATR there or 4.5. Yeah, that's good. If this bearish engulfing will work on 4. Yeah, let's do it there. If the market sell off, see how nicely it will go to 1-to-1 with the next 1-2 candlesticks. DAX, let's check the DAX, what is going on with this fella. I don't see anything on the DAX, so we are at this swing low formed recently, and let's see if the market will put a support around it. What's your thoughts on DAX there, guys? What do you think? Ruben, what do you think there on DAX? I don't see a... I don't want to trade DAX here. I like this kind of smooth trends. Now the market is going a bit sideways, so it's a sign that maybe it wants to climb a little bit higher to grab some liquidity from this level to maybe reaches this low here. Yeah, it may go lower after the break of the low. Absolutely. Yeah, for sure. For sure. I like this bearish engulfing here, guys. Very nice. So back to the news. Nothing for the rest of the day. RBA statement by Monetary Policy Board. What happened there? They decided to leave their cash rate unchanged at 4.35%. Inflation picked up materially in the second half of 2025, and information since the beginning of this year confirmed that some of the increase reflect created capacity pressure, blah, 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 blah. Same story in different time. They are telling us we are almost at the end of the 2026, and yeah, they are telling us, the government of Australia is telling us that, you know, in the second half of 2025 we had this, thank you very much, the guys there, they paid the fuel and the groceries at Coles and Woolworths double and triple the prices, and now you're saying us about the 2025. We don't care about the 2025. Help the citizens there. What is this joke? Do you guys agree? I mean, they are saying all this nonsense, thinking that people now they don't have access to maybe some translators. By the way, this is very funny. Before, remember, guys, when let's say some years ago, we could hear on the news, whatever, that the economists they were talking and they speak and they keep talking that language that we don't understand it, yeah, because it doesn't make sense. They use some words to just bring confusion and make people think that they are stupid, not understand what they are saying. So, okay, so they don't pay attention to what these finance economists and government say. But nowadays, you can just copy, and just go to ChatGPT and simply say, please explain me in simple words what the heck these guys are saying and why they make it so complicated. And it's going to just tell you in simple words. Yeah. Up, my bearish engulfing, my favorite pattern. So, today it was a quite short day here. Guys, I have to wrap up for now. I know I was a bit late today to start the live, but tomorrow we're going to be on time. So if you see that there is a live there on the YouTube channel and I didn't start it yet, don't worry, I will start it. I will not just have the live there and not appear. See, bearish engulfing, let's get it done. Let's get the business done. Nice. Let's go down to the minute chart just to see how it's gonna fall. Gold all the way down. Just a couple of pips, yes. 10 points. 10 points to Cyprus. 10 points to Slovakia. 12 points. Like the Eurovision. Okay, guys. Oh, is coming. Take profit. Okay, all. Take care. Thanks for tuning in. We will be back tomorrow, same time, 9 a.m. UK. I will see you all. Happy and safe trading for the rest of the day. And bye for now.